You've heard the number. It's been whispered in every coffee shop, written in every financial blog, and etched into the mind of every working professional in America. $100,000. For decades, it's been treated as the ultimate finish line. The moment you hit six figures, you're supposed to feel a weight lift off your shoulders. You're supposed to finally breathe. But let me ask you a question that most people are too embarrassed to answer. Why is it that so many people making $100,000 a year are still living paycheck to paycheck? Why does the stress not only remain, but sometimes feel even heavier once you cross that line? If you think hitting $100,000 is a magic pill that cures financial anxiety, you are in for a very rude awakening. Money stress doesn't stop because of a number on your tax return. It stops when your math changes. Today, we're going to dissect the $100,000 threshold. I'm going to show you why this number is a trap for the average person, but a massive springboard for the elite. We're going to talk about the psychological anchor, the tax cliff, and the exact moment when money actually stops being a source of fear and starts being a tool for freedom. If you're tired of chasing a ghost, pay attention. We're going to find the real break-even point for your peace of mind. Let's start with the hard truth about the six-figure myth. In 1990, earning $100,000 meant you were wealthy. You had the big house, the luxury cars, and the private school for your kids. But in today's economy, thanks to decades of silent inflation and the skyrocketing costs of the big three, housing, healthcare, and education, $100,000 is the new $50,000. If you live in a high-cost-of-living city like New York, San Francisco, or Austin, hitting six figures is basically the entry fee for a middle-class life. It's no longer the mark of the rich. It's the mark of the responsible. The reason you still feel stressed at 100,000 is because of the anchor effect. You've spent years telling yourself, once I hit 100K, I'll be set. So, the moment you hit it, you subconsciously give yourself permission to stop being disciplined. You buy the truck you've wanted for 5 years. You move into the apartment with the better view. You start eating out 4 nights a week instead of 2. This is called lifestyle creep, and it is the primary reason why money stress follows people all the way up the income ladder. If your expenses rise at the same rate as your income, your stress level remains a constant. It doesn't matter if you make $50,000 or $500,000. If the gap between what you earn and what you spend is 0, you are one bad month away from a catastrophe. And your brain knows it. That's where the anxiety comes from. Now, let's look at the math that the gurus won't tell you. The tax cliff. When you cross the $100,000 threshold in the United States, you aren't just earning more. You're being hunted more effectively by the IRS. As a single filer, once you move past that $95,000 mark, you are firmly in the 24% federal tax bracket. When you add in state taxes, FICA, and local taxes, you realize very quickly that for every extra dollar you work for, you're keeping significantly less than you did when you were making $40,000. This is where the frustration kicks in. You look at your gross pay and think, I'm rich. Then you look at your net pay and think, where did it go? To stop money stress, you have to stop thinking about your gross income and start obsessing over your net efficiency. Efficiency is the only way to beat the tax man. Are you maximizing your 401k to lower your taxable income? Are you using an HSA? If you are making $100,000 and paying maximum taxes because you don't have a strategy, you aren't an earner, you're a donor. And donors are always stressed because they are working 4 months out of the year just to pay the government. So, when does the stress actually stop? It stops at what I call the velocity point. Most people use money to buy things. They use money as a medium of exchange. They trade an hour of their life for $50, and then they trade that $50 for a steak dinner. That is a linear relationship. At that level, you are always on the treadmill. But money stress stops when your money starts having its own velocity. This usually happens around the time you have your first $100,000 in invested assets. Not income, but assets. There is a famous saying by Charlie Munger: "The first 100,000 is a nightmare, but you have to do it." Why? Because that's the point where the compounding interest starts to do the heavy lifting for you. If you have $100,000 invested and the market grows by a modest 7%, that's $7,000 a year that you didn't have to work for. That's nearly $600 a month. That is enough to cover the grocery bill or the utility bill for an average family. The moment your assets start covering your basic survival needs is the moment the deep stress, that primal fear of being homeless, finally begins to evaporate. You realize that even if you stopped working tomorrow, the machine you built would still feed you for a while. But to get there, you have to survive the middle-class trap. This is the most dangerous phase of your financial life. It's when you earn enough to look rich, but not enough to actually be wealthy. It's the leased BMW in the driveway of a rented house. It's the designer clothes paid for with a credit card that carries a 22% interest rate. In America, we are conditioned to signal our status the moment we reach the six-figure threshold. We want everyone to know we made it. But John Financial is here to tell you, status is the enemy of freedom. If you want the stress to stop, you have to be invisible. You need to live like you're still making $60,000 while you're earning over $100,000. That gap is your war chest. That is the money that buys your silence. The greatest stress reliever in the world is not a luxury car. It's FU money. And you start building that the second you cross the $100,000 threshold and decide not to upgrade. Your life. Let's talk about the psychology of the safety net. Money stress is rarely about the present. It's about the what if. What if I get laid off? What if the car breaks down? What if the roof leaks? When you are making $50,000, these are existential threats. When you are making $100,000 and you have a proper liquidity ladder, these are just inconveniences. To stop the stress, you need a 3-tier defense system. Tier 1, the 6-month emergency fund. This must be in a high-yield savings account, not in the market, not in crypto, not in your brother-in-law's startup. It needs to be boring, liquid, and safe. Tier 2, the insurance wall. You need to be properly insured so that a single medical bill or a car accident doesn't wipe out 5 years of progress. Tier 3, the opportunity fund. This is the money you keep ready for when the market crashes. When you have these 3 tiers in place, your brain stops scanning the horizon for threats. It stops living in survival mode and switches to command mode. But here is the final, most critical warning. The plateau. I've seen many professionals hit 6 figures and stay there for 20 years. They get comfortable, they buy the house, they pay the bills, and they stop growing. They think they've arrived. But in a world where the government is printing trillions of dollars, staying the same is actually falling behind. $100,000 should not be your destination. It should be your refueling station. It's the point where you now have the capital to take calculated risks. It's where you can afford to invest in your own education, start a side business, or buy income-producing real estate. If you hit this mark and you stop, inflation will eventually come for your lifestyle. The stress stops when you stop viewing money as something you spend and start viewing it as something you deploy. When you stop working for dollars and start making your dollars work for you, the silence is deafening. No more debt collectors, no more insufficient funds notices, and no more fear of the future. The $100,000 threshold is a psychological gate. If you walk through it and keep your old poor habits, you'll just be a person with a higher tax bill and the same anxiety. If you walk through it and adopt the habits of the wealthy, the stress dies at the door. 12 weeks of discipline can put you on the path to this threshold, but 12 years of consistency will keep you there. Money is a tool, and like any tool, it's only as good as the person using it. If you use a hammer to break your own windows, don't blame the hammer for the draft in your house. Fix your habits, fix your math, and the stress will fix itself. Before you close this video, I want you to do one thing. Open your bank app, calculate your gap, take your net income and subtract your survival expenses. If that number is less than 20% of your paycheck, you are in the trap. You need to either cut costs or increase your value immediately. Kill the high-interest parasites. If you are making 6 figures and carrying credit card debt, you are burning your own house down. Kill those debts today. There is no investment that will consistently beat the 25% interest rate you're paying on that plastic. The $100,000 threshold is waiting for you. But remember, the money only stops the stress if you have the discipline to keep the money. Don't be the person who looks rich but feels poor. Be the person who is silent, secure, and free. I'm John Financial. I don't care about your title. I care about your balance sheet. Go get to work. I'll see you in the next one.